Kia ora, and welcome to the webinar. My name is John Seed, and I'm from Healthcare Plus. Earlier this year, we ran a webinar titled Health Insurance 101. In that webinar, we discussed a range of topics, including what is insurance, the different types of cover, and discussed some of the jargon that can make insurance very complicated. We surveyed the attendees at the end of the webinar and received feedback requesting to take a deeper dive into hospital insurance. We're working with Shane to create this webinar. Shane King is a qualified financial advisor and is a Healthcare Plus representative in Whanganui. And today he'll discuss hospital insurance plans in detail. So before we start, just a couple of housekeeping items. The bottom of the Zoom screen on the far left is the audio setting. Central is the chat and Q&A functions, and the right, the option to leave. We're really keen to hear from you today, so please ask questions. At the end of the webinar, we'll go over them. If we don't have time to answer them all today, we'll collect them all and get our team to answer them and email out the answers. That's enough from me. Kia ora, Shane, and over to you, mate.
Okay, not too bad at health insurance, just technology. So I think I'm on now and all good to go. Okay, so you can see my screen there, I'm hoping. Can you see that, John? Yep.
No, not yet.
Cool. Okay, give me a minute. Just bear with me, guys, while I share the screen. How's that, John?
One of the panelists says they could actually see your screen.
Okay, cool. Maybe it's just sure at your end. So yeah, apologies everyone. I am not as good at technology as I am as an insurance advisor. So let's launch into this. And if there's any issues, let me know, John. So yeah, thanks for coming along. Like John mentioned, this is a follow-on from a previous presentation that I did do, so I hope you do get some value out of it. But before I launch into it, just a bit of a disclaimer that the presentation is not intended as providing advice. We do recommend you seek advice on specific requirements from a financial advisor. Preferably who specialises in life and health insurance, but I hope to give you an overview of the different types of things out there. And although we provide information related to different insurance companies and their products, we believe it to be accurate at the time of the presentation, or certainly putting it together, but it's not a substitute for policy wording, and that's what the insurance companies are guided by at claim time. And I do have a slide just to give you an idea on premiums for different age bands. And that was certainly accurate at the time of putting the presentation together, but they do change from time to time, their premium. So with that said, what I'm going to go through tonight is the levels of medical cover, so around surgical cover and what we term non-surgical cover. Give you a little bit of information about drugs that are funded, and then the ones that aren't funded by government or pharmac. And then a little bit about specialists and tests, which can be quite confusing for people. Under insurance or under health policies, they also offer additional benefits. So, yeah, there's quite a range of them, so I'm just going to run through a little bit about that as well. And then, as I mentioned, I'll give you a premium comparison. I've picked a couple of age bands there, just to give you an idea what premiums are like. And I'm also going to touch on retirement. You know, preparing for retirement when we know premiums do increase. And I'm going to run through 3 case studies. These are actual people I've worked with, just to give you an idea how insurance, that there's not one perfect fit, I guess, for everybody. It depends what you're looking for. So with that said, what is the right plan for you? And that, it does depend on the level of cover that you require. Certainly premiums can be a focus for people. So, you know, if you're wanting a cheaper plan, you've got to understand what's in that plan. I mentioned before, you know, non-funded versus funded medication. So that can be important for people. And also pre-existing conditions. So certainly when you try and get into health insurance or private health insurance later in life, there can be some medical conditions that pop up, and it could be important to have those covered. So I'll touch a bit on that. And of course, specialists and tests that perhaps may not lead to surgery. Some people like to have that covered. So again, I'll have a bit of a talk about that. Now, I have used 3 insurance companies. So Healthcare Plus, we do have access to a range of insurance companies, but so the slides aren't so busy, I've selected three of the main insurance companies. And just to give you an idea how policies can be quite different, and I guess things to be aware of. So with that said, you can see straight away the surgical cover and how there is quite a spread of cover between insurance companies. So insurance company A, there's 300,000 cover, B is 600,000 cover, and insurance company C is unlimited cover. Probably important to I guess understand with surgery and claims that I've dealt with. I've been in this game now for 16 odd years, and claims that my highest claim I've dealt with for one single surgery is 100,000. And I know there was some statistics from insurance company C where their highest claim was 230,000 for spinal fusion. And there was about another 4 or 5 claims for one surgery that was over 200,000, so within that 200 to 230,000. So although they have unlimited, that was something and this particular insurance company brought in a few years back. And it was more because they were quite confident, I guess, that they wouldn't, within one policy year, go too high with the claims. So certainly, I guess what I'm saying is I use all 3 insurance companies depending on a client's need, but I'm also quite comfortable insurance company A with 300,000 is plenty in my view. And I guess making a point there, it is per policy year. So if your policy started in November, it would carry through till next November. And then those limits it would actually reset and you'd have them all over again for the next policy year. Another thing to point out, you'll see right at the bottom there are a couple of insurance companies that use what we sort of term affiliated providers. And what that means is you must use who they say you must for things like colonoscopies, hips, knees, that type of thing. And the idea of that really is to keep premiums in check. So I guess that can have an advantage of premiums not going up too much. But in saying that, insurance company A and B, they don't have a restriction on who you can use. So that can also be to your advantage if you have a preference. And also I know with insurance company B, if the premiums, if the surgery is higher than what seems to be normal, so a surgeon's trying to charge too much, which can impact premiums, they will go and negotiate with that insurance company, but that won't affect their clients. They'll still pay and make sure they get what they need. So I hope that explains a little bit about surgery. The next thing's around non-surgery. So non-surgery, most people can sort of relate to your cancer treatment where it covers things like chemo and radiation. So they essentially haven't sort of cut you open or anything, but you're getting treatment for something that's not surgically related. And you'll see there with the insurance companies, insurance A covers 65,000, insurance B is 500,000, and insurance C is 60,000. So really taking it back to that previous slide where you saw insurance company C had unlimited cover, and here they have 60,000. So I guess what I'm trying to sort of put out to you is just be aware of the policy wording and what's covered throughout the policy. You may be missing out somewhere else if you think, oh, unlimited is quite good. And then you look at the non-surgery and there's less cover. So just be aware of that. And under the non-surgical benefit, most insurance companies will cover medication that's funded. So if Pharmac approved the medication, you'll generally find that covered by all insurance companies. However, if it's non-funded, you may find there could be a bit of a shortfall, which I'll run through right now. So but people often ask me about your funded drugs versus non-government funded drugs. And I guess it's perhaps that media coverage of people not being able to afford it, and having to sort of go and raise money or up mortgages, etc. So just to give you an idea, insurance company A and C, if it's related to cancer and the drugs aren't funded, then they'll pay up to $10,000 per policy year. And you'll see insurance company B, they pay 500 to 600,000. And that really all depends whether it comes under their surgical or non-surgical benefit within the policy wording. And then if we look at non-cancer drugs, so there's a range of illnesses where you may need the high sort of end drugs. And I guess I should say non-government funded drugs, we're not talking about, myself personally, I had to get a prescription yesterday and I paid $5. We're not talking about that kind of thing where you've got to pay a little bit extra. We're talking about the high-end life-saving drugs, is what we're talking about here. And so for insurance company A, they offered $2,000 towards non-cancer drugs, and insurance company B is still 500 to 600,000. And again, that comes under their surgery and their non-surgery. So that includes the surgery, any drugs that you might need that are funded, not funded. It all comes under that per policy year. And then insurance company C have no cover for that. They don't offer that. So I hope that makes sense. Certainly throw questions in there and we will answer those for you. So specialists and tests. Now that's an interesting one. You'll find that all insurance companies will cover specialists and tests under their base plan only if it leads to surgery or some kind of treatment. And insurance company B will cover that 12 months either side of the surgery or the treatment. And insurance company A and C will cover that 6 months either side of the treatment or the surgery. If you want to have specialists and tests covered that actually don't lead to surgery, then you can add on a specialist and test module. So that gives you a little bit of extra cover. And I guess the best example, I've had to call on my insurance just recently for my daughter, where we had to do a range of going to see a number of different specialists. And we had to have a procedure for her and an ultrasound. And I think we've spent upwards to $1,500 to $2,000. And I only have the base plan, which wasn't, so that wasn't covered under, because I didn't have specialist and test module. I had to pay for that because it didn't lead to surgery. But thankfully, I do have the day-to-day plan through Healthcare Plus, which I got 50% back. So I was a bit grateful for that. So in that particular case, if I wanted that paid for, then I would have to have that specialist and test module. But my daughter, she also needed 2 MRIs on her back, and that came to is $4,500 for the 2 of them, and that was covered with insurance company B. So you'll see there that I've put down they cover up to 19 major diagnostic tests, an MRI, CT scan, colonoscopy, gastroscopy, some of the ones that they do cover. And insurance company A and C, A covers up to 7. And insurance company C covers up to 2 major diagnostic. And if you want any more than that covered, you have to add on the specialist and test module. So I hope that makes sense. I know insurance can be a bit difficult to get your head around, which I guess why seeking advice is probably quite good if you don't understand that. Okay, so additional benefits. You'll see there I've sort of listed the additional benefits of these particular insurance companies. And you can see there is a range of what they offer under their policies. And yes, it can reflect on premium. So it's finding out what's important to you. Some of the more common ones there are a support person accommodation and transport benefits. So that's if, in my case, I'm in Wanganui, as John mentioned, and often for major operations, I may find myself up in Auckland or Wellington. So my particular plan will cover me for my wife to go down for transport, and for a support person, for her to get a motel and stay down there for to support me. So there are limits that they cover up to. So again, just be aware of that. And in one of my case, studies, I sort of allude to that where it was important for a particular person. Another good one there, you'll see insurance company B, which the other two don't offer, but I know there are a couple of other insurance companies we use that also offer this. It's what we call a second opinion benefit. So where that comes into play is if you go and see a specialist and they order some diagnostic testing, and then they give you a course of treatment, but you're a bit hesitant about that or a little bit unsure whether that's right or not, insurance company B will pay for you to go and have a second opinion with another specialist surgeon kind of thing. So that can be quite useful. But I'll leave it at that. I'm not going to go through all of that, though I know there's a bit on there and hopefully you've had a bit of a chance to read it all. But the key thing is just be aware of what's important to you. And premiums, so I've just done insurance company A and B. I just don't want to make the slide real busy with a heap of numbers, but insurance company C kind of sits in the middle of those two. But my main thing is really to show you if premium is your focus, insurance company A is, I generally find always a lot lower in premium, whereas insurance company B is higher, and there are a couple of other insurance companies that are higher again, as my experience. And a lot of that with insurance company A, again, it's sort of union focused insurance company, which is really good. And they keep the premiums down, manage it well. Insurance company B, if you reflect back on the slides I just showed you, there's higher levels of FARMAC cover. There's a lot more additional benefits. So if those kind of things are important to you, I guess you've just got to be aware you do pay more in premium. So that's important to understand. Whereas if you want something that's going to give you surgery, it's going to take care of you and really give you what you need without that non-funded medication and some of the other sort of bells and whistles, and insurance company A is good for that. The other thing I want to point out, and I get it quite a bit, I hear it quite a bit in the industry, and I get a little bit with some of my clients, is that they hit age 65 and premiums go quite high. And of course, if they head into retirement, income's often less. They've got to be more aware of their money. And so the premiums do go up. But one way you can manage that is by increasing your excess. So I've kind of in that last column given you an idea with insurance company A, where they go to a 4K excess, and you can see how the premiums drop a bit from, age 60. But insurance company B, you can go to a 10K excess, and you can see the premiums drop right down. And 10K, it seems like a fair bit of money, and it is a fair bit of money. But what I often give advice to my clients is, plan ahead into retirement and save for the excess or a couple of excesses, and you can reduce your premium, maybe have a bit of insurance when you perhaps need it the most. So it is pretty hard. I know as a financial advisor, we always, it's hard for us when we've sort of been with client over the years and then they get to a stage they can't afford it. So we are driven a bit by what the insurance companies and how they price it, which is difficult. But I must point out, I base the premiums on $1,000 excess, and they are fortnightly payments. Right, so getting it right the first time. You can probably see from what I've already gone through that there are a lot of products out there. There's sort of base plans, specialists and tests. Do you look at adding on GP cover, dental, that type of thing? There is a lot out there, so it's important that you sort of get it right the first time. The small print, we're well aware of the small print and can talk to you about that. And you'll see I'm about to go through some case studies, and one size doesn't fit everybody. And what I've got here is sort of that second point, making the wrong decision sits with you into the future if your health changes. And what I actually mean by that is, if you are, for example, wanting a medical plan that covers medication not funded, and you sort of go on the internet and think, oh, that's quite cheap and seems to have everything I need, and then you take that out, and then you have an issue later in life and it's the wrong policy, it could be very hard to change to another insurance company because of pre-existing conditions. And I've kind of demonstrated that a bit in some of the cases on the next couple of slides. So it's important to get it right the first time when you're looking at insurance, which using a financial advisor can help you with that. So I'm going to launch into a few case studies, or 3 of them, in fact. And the first one is that these are all actual clients of myself, and I've sort of tried to pick a range to give you an idea on different advice that can be given. And in this case, it is a client who had an existing medical cover. It happened to be with insurance company C, but they weren't actually happy with the low levels of medication that wasn't funded for their family. And a bit of context around that, they actually had a person, and this kind of often is how it happens when people approach us. They had a friend, within their circle of friends who actually had a requirement for medication not funded, and they didn't have that in their medical insurance. And so their options that were open to them was increase their mortgage. You can use your savings if you've got it. You can go to family, or as I often see, is people going to give a little and try to raise funds. So for them, it was important to have a plan that could do that, so they didn't have to stress if that need popped up. But as an advisor, I've got to be very cautious. I sort of mentioned they have existing medical cover. I've got to be careful about moving them to another insurance company and make them aware of what can be lost. And in this client's case, the children were okay, but for them, they had existing medical conditions that I knew would likely need an operation in the future. So I wasn't comfortable moving them from insurer C just to get higher funded medication. But we did come up with a solution. And the first suggestion I made was the children could move to insurance company B because they were all healthy. There was no existing conditions. And we ended up achieving their goal, I guess, of covering medication that wasn't funded. So that was an easy decision. For mum and dad, what we did with them is I suggested that they stay with insurance company C because they were covered for existing conditions. But what I also suggested, which I actually do for myself, is consider a second medical policy, which probably sounds a bit crazy, and I haven't got time to go into that now. But essentially what we did is we had the high excess, the $10,000 excess with insurance company B, which gave them that higher cover for medication not funded. And if it related to cancer, heart attack, or a stroke, that excess is actually waived, so it may cost them nothing. But what we also did is insurance companies see we increased the excess, which actually allowed us to smooth the premium out, so they weren't actually paying any more than what they were originally. So we made a few adjustments and achieved their goal. So a little bit different here is a couple who had no medical cover in place. However, they did have some lump sum benefits. So what we call trauma, critical illness, and life cover, which is a payment on death. And what they wanted all their pre-existing conditions covered. These people were sort of in their 50s, and they wanted a higher level of non-funded medication. But I knew I couldn't achieve everything they wanted. There wasn't a plan out there that would cover it. Well, there is, but there's not a plan that would cover all the pre-existing conditions and give them a high level of non-funded medication. So what I did with these guys is I made a suggestion to go with insurance company C, who do have a plan that would cover all pre-existing conditions after 3 years, but the premiums were really high for people, sort of in their 50s. They were really high premiums because there was no excess on the policy. It covered specialists and tests, and it covered some GP costs and that as well. So on reflection, they thought, well, that's more premiums than they're willing to pay. And then after 3 years, we could drop to another cheaper plan and they would still be covered. But in their particular case, it was just too much. It was beyond their budget. And so the other option I gave them as well is we looked at insurance company A, which would actually cover most of their pre-existing conditions after 3 years. And then they would have to rely on the public health system for anything that wasn't covered at all, sort of ever again. But I also made the suggestion that they keep their trauma cover in place, and that's how we would take care of non-funded medication. So trauma, some people might know it as critical illness. It covers quite a range of different conditions. The main ones being cancer, heart attack, and stroke. So if they got a cancer and got that paid out, they could then take that money and use that towards medication that wasn't funded if they ever needed it. The only issue with that is it's a one-off payment. So if you needed ongoing medication not funded over a number of years, once they used that up, that was kind of it gone really. So, but they were comfortable with that, and that's how they moved ahead with it. And my final case was a young couple, and they had a child, and it was important to them to have a medical plan that would provide good cover for surgery. Medication not funded, that seems to be quite a common thing lately. And one thing that was important to them was financial assistance for a support person for their child, really, if they wanted treatment away from home. They wanted to obviously be there, but they wanted that covered as well. And it's important for me as an advisor really just to understand what my clients are actually looking for, what their sort of drivers are around medical insurance. And in this particular case, their child has a medical condition, which is a childhood condition that the child will grow out of, that actually requires surgery now, but it was going to take too long in the public system. So they're going ahead and they're going to pay for that surgery. And what they've realised is the money that they had saved, that's going to take a fair chunk of that. And then if mum or dad needs an operation or the child needs another one, they're not actually going to have a lot left in the bank. Being a young couple and all, buying houses, that type of thing, they're not going to have a lot left. So they thought having private insurance would be a good option for them into the future, for covering them for any needs that they might have. And so what we did for them was quite straightforward. Insurance company B gave higher levels of medication not funded, but again, one of the important things for them was accommodation and travel, and insurance company B had higher levels of that. And what we do as advisors, when a client comes to me and looks at or wants medical insurance, I'll go through and I'll compare premiums across all the insurance companies we deal with, and also policy wording, and then I'll give them a report explaining exactly what the recommendations are that perhaps fits their situation. And in this case, I did exactly that, and the premiums with insurance company B were competitive. And a part of that is to do with the discount Healthcare Plus get for union members, which is 10% with this insurance company. But another little trick of the trade, when we put a risk benefit with this insurance company, so risk is your life, your trauma, that type of thing, it actually discounts the medical premium a little bit more, making it cheaper again, but they get more bang for their buck. So yeah, that's a bit to explain. So again, get hold of somebody in your area if you're unsure, and I'm sure they can run through how we do that. So just to recap, what's the best plan for you and your family? So again, it depends what you're looking for, really. Is low premiums your focus? Is that your driver? Do you want pre-existing conditions covered? Non-pharmac medication? There's a lot to think about, and we're sort of here to help you through that process, which kind of leads me on to get an expert on your side. So a couple of key points, I guess, is there is no cost to you for getting the advice. So make use of our industry knowledge. There's a lot of knowledge around Healthcare Plus, make use of that. Premiums are the same whether you go through an advisor as going direct to an insurance company. So again, by coming to an advisor, it can add a lot more value having an advocate. And I know with Healthcare Plus, we help with administering the policy. So I'm forever helping clients with any changes that they need. And perhaps when it counts the most is assisting at claim time. That's something I'm really hot on, and I've had a lot of claims lately actually, and that's my philosophy. The client's going through some kind of issue. I don't want them to worry about an insurance claim. That's my worry. They worry about getting better. So you get all that support as well. And we do have industry knowledge across the leading insurance companies, which does allow us to get the right solution for you. And perhaps an example of that is I had in the last month or two, I've had a couple of people now have approached me, and they've had access to their partner's group scheme. So an employer can often have a group scheme. And in this case, they were union members and had the opportunity to come into Healthcare Plus. But my advice after sort of questioning them further on everything was they actually look at going to their partner's employer's scheme. And the reason for that is in these cases, they would cover pre-existing conditions straight away, which was a good deal. And the employer also paid some of the premium, so that was a good deal. So it just kind of made sense. So we're not about trying to reel people into Healthcare Plus. We're about giving genuine advice, which I hope comes through. And so the other thing is we have got you covered. We do have advisors throughout the country. So make use of it as a union benefit that I know they're proud of, and make use of the advisors throughout the country. And you can get hold of us, through the website or through giving us a call. And it's also important to point out we also give advice around life insurance, trauma, mortgage repayment, income protection. There is a range of those risk benefits we give advice on, which is important to know because they can actually tie into your medical plan as well and how you might structure that. So I do hope that has been of value. I think I'm handing back to yourself, John, for any questions, but I do hope that has been of value to everybody.
Yes, absolutely. Thank you, Shane. Some really good information there. And just like to say thank you to all the people that have sent in questions. And I've been trying to answer some of them as we go through. There are a number of questions, and I'd like to start off with this one here, which I think is actually a really good one. And it says, isn't it better just to save money regularly in a health account and then use that to fund the treatment? Is that a recommended option or solution?
Yeah, and it does really come down to the individual. I think there's a range of sort of arguments, I guess, that have merit, and that is one of them. Do you save the money for an operation at a later date? And it probably works well if you go through life and you don't have too many operations, or they are low-cost operations. Or it might be just yourself. And in my case, there's 5 in the family, with my wife and I and the three children. And I know, like, my daughter's been going through issues that cost, a bit of money. And if one of us go through some issues ourselves, then we've got to come up with, I guess, extra money for that. I went for an ultrasound, funny enough, this morning. Saw my doctor yesterday and I was in privately this morning, so it happened all quite quickly. But if that leads on to some kind of surgery, then I've got to pay for that as well. So it really depends on your situation. I think people use insurance certainly through their working life, because the quicker you can get in for treatment, the quicker you can get back in an income again. But yeah, I understand the argument. You get to retirement and it's quite expensive. But I've dealt with claims. I mentioned earlier a one-off that was 100K. That's a lot of money to save up for. I've dealt with
especially for retirement stage.
Yeah, particularly retirement, but a cancer claim as well. That in the earlier years I got in the industry, probably, well, crikey, I'm probably going back 14 years ago now. That was 72,000 for that whole process for cancer. So often you don't think about just the initial treatment. There's often a lot of other treatments after that initial one, and that's where it can add up, is particularly around a family, like I say, where something might happen in quick succession and all of a sudden your funds are depleted. And I kind of mentioned that in that case study a little bit as well. I guess where a family's now paying for their child to have an operation and they realise, crikey, if something happens in the next couple of years, they may not have the money. Or the alternative is they go through the public health system And that's a fair argument, you know, if that's what you think's important, or how you want to do it, that's cool.
Great. A couple more questions. There's a good question here is, are childbirth benefits covered under insurance, or is it generally covered under the public health system?
Childbirth benefits. It depends what they're meaning by that, John. And I guess the way I can put that to you is, I know under the day-to-day healthcare plus plan, there's a childbirth benefit just for having a child, I think $250. With private health insurance, you do go through the public area for having children, and a lot of them won't cover any complications until 90 days after birth. So the best place to be is a public system. And it's a bit like, I'm probably moving away from your question, whoever threw that, I apologise, but it's a bit like COVID. If you think of that, that's quite on people's minds at the moment, obviously. It's not a private health response, it's a public health response. So it's dealt with in the public system. And that's kind of like childbirth, it's dealt with in the public system, but any complications after 90 days, often they can cover that. You know, whether it be for your income protection or health insurance. So yeah, it's a bit of a hard one, but I guess the best thing I can say, if that's important to the person who asked the question, give an advisor a call and just get more specific with it, and quite happy to help out and give a better answer.
Yeah, it's very difficult to give a full answer with a general kind of question. The number of people that are actually asking whether or not life trauma also are included under health insurance. And again, it's a pretty complex area. Again, I'd probably suggest people should speak to an advisor and see what it is and what you define as trauma often is the issue from a client perspective, correct?
Yeah, and I think, again, everyone's situation's different. You know, I can have people come up to me and say, oh, look, I want some life cover. And I'm like, do you know how much you want? You know, would you want me to give you a bit of advice around that? And I have had people that said, oh, look, $1 million is pretty standard. And my response is $1 million is standard for the person who needs $1 million. But if you don't need $1 million, you only need 200,000, you're kind of taking premium away from other insurances that you may need. So it's important, again, to get advice. And I kind of, the way I give advice to my client, and this is just me, other people may do it differently, but I think you'll find we're all reasonably similar. I kind of treat it like an investment where you've got to diversify your portfolio. It's kind of the same with insurance. If you have life insurance and you don't die, but you have a major stroke and you haven't got some kind of income or trauma insurance, the life insurance isn't going to help you because you didn't die. So it's important to understand what are you trying to achieve. And if it's to clear your mortgage, you can often have a bigger impact having a stroke than actually dying. And I know that sounds horrible, and I apologise for that, but when you pass away, the money can just be paid out and off it goes, it takes care of something. But when you have a stroke, someone's then got to care for you if it's a major one. And if you haven't covered yourself for that kind of event, you can find yourself getting in trouble financially, particularly if you've got mortgages and that. So it's important to get that advice.
Okay, thanks, Shane. I think Tom, probably just for one more, is that people are saying we understand that premiums get older, more expensive as we get older, but it sort of feels a bit unfair because it's the time we need the insurance. What can we do to ensure that it can still be affordable when we get into retirement?
Yeah, and I probably touched a bit about that on that premium slide. I know it's a difficult one, and yeah, it is hard. It's hard for myself when I see people heading into retirement and they can't afford it. But all I can suggest is, again, talk to an advisor. If you've already got health insurance in place and that's a concern of yours, again, go back to the person who put it in place, or if you went direct, find an advisor. They can still help you out. and look to save money into retirement. That's kind of my plan. As I've sort of got my retirement fund that'll help me for retirement, but then also my medical fund that's going to help me with excesses. And that's my intention, is to hit retirement, have the highest excess. And then if I need a hip replacement and the public system happens to be going slow at that time, then I can go private and have that done. So it's really just thinking into your future, not the here and now. That's what insurance is for, I guess, into the future. And it kind of works the same when you think about fire and general insurance. So insuring your house, insuring your car, those premiums tend to go up as well, and they're there for peace of mind, I guess. It's like I have people that can go right through to retirement and maybe had a couple of minor things happen, and they're like, oh, that's a waste of money. But it kind of works the same as your house insurance, I guess. If it burns down, you're covered. If you have cancer and you need quick treatment, you can go and get it. So it's the same kind of idea. So, and I know that doesn't help when premiums get higher, but plan ahead is my best advice.
Great, thank you. I think we have time for just one last question. Somebody said, we noticed that there's a difference in male and female premiums. Just not quite sure in terms of what is the basis for that variance?
Yeah, good question. It's and if you're looking for age, so if you're looking at a 50-year-old male, 50-year-old female, generally the difference is insurance companies can price on statistics. So, if they can prove there's a difference between male and female, they can set the premium based on that. And so where that comes down to, generally when there's a difference on the same age, male, female, is, and generally females are higher in premium, and that's because they tend to go in for more procedures than what males do. So whether that's related to they just happen to go to the doctor and they're better at doing that than males and getting diagnosed, or as I say to some of the ladies, there's all the ladies have some maybe extra things in there with birth and all that. Probably the best way to put it, that may need things done. So the costs are higher to the insurance company. If you were to compare life insurance with a male and a female, then males are generally at the same age are rated higher than a female, because the stats show that males die earlier than females. So it's all to do with statistics, really.
Right. Thanks so much. I really just like to, running out of time, I'd just like to thank everybody for taking the time to join us today. And a special thank you to Shane. There's a lot of information here. So we'll be sending out recording of the webinar, this recording, and also the previous session, the 101, along with a short survey seeking your feedback about the webinar. And please, we ask you for any topics of interest that you'd like us to include in future webinars. So that's enough from me. Once again, thank you very much for joining us tonight, and good night.
Thank you.